welcome. You're watching Money, 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 and I'm Sumaira Abdi. It's a special day for us at Money, Money, Money as we celebrate 52 episodes. So that's a whole year of analyzing, advising, and planning for a secure and financially stable future and creating wealth in the process. Why do I need a financial planner now? What has changed so dramatically in the last few years?
Money is not important in life.
It's fun to see you guys.
Most of the time. You need cassettes so that...
What will spoil my score?
It's accumulation of a couple of things. Taking care of the utility.
Well, there's always some money like...
For 90 days. Then if you are going to do SAP...
All ready for his business as well as his...
In saving bank account, then maybe the cost of the policy will...
But for everyone who's wondering what Aditya is doing on the...
So at the moment there are 3 Germans in the army.
Go into my savings account.
Get advice from Mr. Rumta.
You agree?
Very, very backward.
Maybe that's why.
Like I have to have certain number of...
To rev the savings engine. What about...
Someday boom.
What is this?
How do you get there? And you draw up a plan. What type of investment they are doing?
When we retire or...
That's a basic fact, I think.
And I can take a loan on that.
Very happy Diwali to you and your family to find out the next best investment ideas. One of the things that works me about some ideas for investment.
Things that we believe will do well. And you are seeing this thing in Indian democracy.
Once you get to know the customer, who doesn't have expertise to actually analyze balance sheets.
And what better way to mark this special occasion than to invite some of our viewers and help them chart out their finances better. So with us today, we have the students of the Aditya Institute of Management. And as always, 2 of our favorite experts, Pankaj Matpal of Optima Money Managers and Prakash Diwan of Altamount Capital Management, join in to decode the myths that are sometimes associated with financial planning. So let's get started right away. Thanks very much for joining in. And thanks also to all of you for making the trip down to our studio. I hope this is going to be very, very beneficial and we're very happy to have you here to share in our festivities. So let's get started. But before I get you guys to ask your questions, I have a few questions for the experts myself. Pankaj, we've been, for over a period of 1 year, discuss a lot of topics which are really required to pay attention to. But what in your assessment would be the few things that everyone needs to know when they start out planning their finances?
See, most important thing is that people should invest after setting their goals, and most of the time it happens that they invest in any asset class without setting goals. So they never know that which way they want to go, where to reach. Because if you're a long-term investor, you invest in equity, so you know that you have to remain investing for long term. But it happens that people invest, and because goal was not set, after few months only they need money, and then they want to redeem that. There are opportunities which they miss, or sometimes they even book loss. So if you know that you are keeping money for different goals, for short term different asset classes, long term different asset classes, then only they can achieve their goals.
Yeah, fair enough. But Prakash, my question to you is not going to be what to do in the market, but rather what not to do. What are the few common mistakes that a lot of people end up doing, which you really think is like almost sacrilegious?
Yeah, that's quite true, Sumaira. In fact, people tend to take a very simplistic approach to investing into equities. So first and foremost, don't go by tips.
Yeah.
Don't go by rumors. It's not as simple as it seems. People keep on saying, I know somebody who knows somebody who is very well known in the stock market, and I think you need to also do your own analysis. You guys are students, you know that this is not just equity, is a lifelong learning process. Continue to do your own homework. Never ever stop that. Even if you have the best of advisors, stick to your goals, stick to your fundamentals, as Pankaj said, have goals which are aligned to your stock investing. I think it's quite simple that way, but you shouldn't kind of take it very lightly. It's not easy to make money without doing the right things.
Yeah, and I want to add my 2 bits also, if I may, which is never get sentimentally attached to any of your investments.
Yes.
Be really practical about buying and selling. But anyway, so let's get started. Then you guys are soon going to be working. You'll have your own money to spend and save and invest, I hope. So what questions do you guys have? Who wants to go first? Sure.
Sir, I'm Chirag here. And I just want to know that on what basis we should decide that which stock we have to invest on.
There's never one best stock out of the entire market that you need to have. Otherwise, everybody would want to have a stake in that. So what you need to figure out is, it's always a mix of stocks that you need to look at first and foremost. Never rely on one stock. Even if you have the smallest amount like 10,000 to invest, you can build a portfolio of 10 stocks, 5 stocks. Because today it's possible to buy a single stock as well. right? So you don't need to kind of be inhibited by the quantities of a particular stock that you can buy. So always have a mix. Ideally in a portfolio, 10 to 12 stocks in the long term is always good. Beyond that, it gets slightly unwieldy. And you know, it's like if I tell you that you need to pick the 10 best stocks, you will really work hard to identify those 10. But if you have a choice to pick 25, you'll be slightly more liberal with your choices. The way to go about doing that is, if you have a long-term view, look at a business that will continue to do well in that long term. You know, if you, let's say, looking at 10 years from now, I try and understand whether a business has 10 years of visibility of, you know, growth, what kind of growth it can, you know, clock, and whether the management is capable of doing that, whether it's in the right competitive, you know, environment or not. Whether, you know, if there's a company which has great management, everything's good, but it's not in the right industry itself, you just can't do anything about it, you know. So you need to be making sure that all of those things are aligned, and then the financials and all, of course, you have to look at it in a healthy state of mind. The balance sheet is good enough, there's not leverage in that. But to begin with, honestly, it's the best way to get into equities through the mutual fund route. If your amounts are not so big and significant, you would always look at a good scheme to begin with, till your corpus becomes slightly bigger and your needs are much more sharply defined as compared to a common person.
Yeah, because if you're going to have a portfolio of 25 stocks, then get one mutual fund.
Yeah, absolutely.
All right, so who's next?
Hello sir, I'm Tejas, and as it is said in the investment avenue, mutual funds are one of the safest places to invest your money. But do you think we should diversify a fund into real estate as well?
So when you're talking that real estate and mutual fund, two are different things. Real estate is one asset class. Like there are different asset classes, equity, debt, commodity, gold, silver, etc., or real estate. Mutual fund is a vehicle to invest in different asset classes. For example, if you want to invest in equity, you can invest in equity mutual fund. If you want to invest in debt, you can invest through debt mutual fund. You want to invest in real estate, there also you have choice to invest through REIT. So these are vehicle to invest in those asset classes. So now coming to your question, you said that you should not diversify. Mutual fund is the way of diversifying your portfolio. So if your question is something like that, shall I invest only in equity, or should I diversify my portfolio between equity, debt and real estate? So I will say definitely you should diversify your portfolio amongst all asset classes.
All right, so that's good advice. Who's next? What about you?
Hello sir, I am Akanksha. I would like to ask, while selecting the stocks, what should we focus on, whether it is technical part or the fundamental part?
You know, actually both of them make sense. It's not that in isolation either of them can suffice, but at the same time, you know, it's difficult to say which is better, which is, you know, lesser of the two. Technicals tell you levels. It will be more of, you know, an indication of what kind of levels you could expect in a stock going forward, provided it's not into an uncharted territory or a new zone of sorts. If it makes new highs, then there's no track record or historic data points to go by. But if it's going back to some levels that it used to be at some point in time, you can kind of anticipate certain behavior, where it will stop, where it will face resistance, get support. Fundamentals remain the key in terms of identifying the stock first and foremost. Levels would be decided by technicals. That's how it works. You cannot, I mean, you can start with technicals also. There are people, but it's more for trading. It's not for investing. You can't find a good, technically a good stock for investing. Because technical is usually short term in orientation. Whereas fundamentals will be more, you know, your balance sheet can tell you about the last 3 years and hence the next few years. So I wouldn't say which is better, which is not, but you can't rely on each of them or either of them in isolation.
Well, and more importantly, don't start by becoming a trader and forced to become a long-term investor or vice versa. But let's take a break on that note. We'll come back in just a bit. Everyone's going to stay around, so we're going to have a lot more queries by the students. All of that on the other side. Stay tuned.